Recording in progress.
Good afternoon, everyone. I want to welcome you all to the Tax Resolution Help Center. My name is May. I will be hosting today's session and introducing today's speaker. I will also be coordinating the Q&A chat session at the end of this session. I want to congratulate all of you for taking steps to deal with your taxes. Taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax, represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you're entitled to live a happier, healthier life by keeping more of what you earn and getting the tax man off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. The presentation itself will last about 20 minutes plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. Other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do-it-yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. And to better understand what might be on your mind during the session, I might include some polling questions to ask you. I will then finish with a 5 minute wrap up. Also, a survey will be sent looking for your feedback. And finally, this session will be recorded. The topic for today's session is dealing with liens and levies, garnishments, and asset seizures. And the tax expert for today's session is Vincent Lloyd. Vincent has been a CPA for over 30 years and has represented individuals and businesses before the IRS to provide relief options to remove, reduce, and resolve their tax obligations. Certified public accountant licensed in the states of Minnesota and Illinois. He is accredited by the AICPA as Certified in Financial Forensics, or CFF, and as a personal financial specialist, or PFS. Vince is a QuickBooks certified pro advisor and provide tax planning and management to individuals and small businesses. With that said, introducing Vincent Lloyd.
Thank you for that kind introduction and welcome to this presentation. And this is a brief presentation. When you're dealing with liens and levies, garnishments and assets, we could take days in explaining and going into depth. So this is really a high level overview, but want to emphasize particular points as a basis and a foundation as you deal with them. And one of the things is like the background. When you start dealing with in this area of appeals and collections, you have to really understand the assessment processes that the IRS use. And this is the thing with the IRS. It's very process driven. To focus on these processes. You have to focus on the dates and the times and whether you can meet that or your client can meet it. And so also that's why I've got down here advising delinquent taxpayers, because that's really to me is um, dealing with the IRS is very small. It's dealing with a client that is being very evasive or has challenges as far as payment. And I always try and let them know, it's best to confront and work with the IRS. You might not necessarily like the outcome, but trying to avoid and pushing it off into the future, it brings its own peril because those tools that you can take advantage of right now at this particular point in time, you lose them at the end. And so that's the collection process, the liens, the levies, and those seizures. So, and really, you have two types of appeals. You've got a collection appeals and you've got an examination appeal. And I'm just using this in a broad sense. And so the CAP program deals with those, uh, the alternate payment, because the assessments have been made. So it's not an issue of that you trying to bring issues up. Sometimes if you do bring issues up, appeals may send it back. Those are very sophisticated types of cases, but in general, that won't happen. But this is where you have the offering compromise, trust fund recovery penalties, all these levies and liens. And this is where this process comes with the collection appeal. But the examination, it's a little bit different. So, and in both of them, but primarily examination, you want to ask, did the IRS follow its process and procedures? That's really what you're looking at in the examination appeal. Did they make a mistake? All right. Did they give the client 30 days, 45 days, 90 days? Did they do that? Did they reach out? Did they mail stuff? Because a lot of times people say, oh, well, I never did receive anything and the IRS didn't contact me. And that may be true. All right. So the IRS have to show, hey, this is what we did during this period of time. And we tried to contact Mrs. Taxpayer, and here's our documentation to show that we did. So let's get into it. And this is just, once again, a broad overview as far as what liens are. So in the lien, as far as tax lien is concerned, is the government's legal claim against your property when you neglect or fail to pay a tax debt. The lien protects the government's interest in all your property, including real estate, personal property, and financial assets. A federal tax lien exists after the IRS put your balance due on the book. So the assessment has been made. All right. And that's what I was talking earlier. There's some tools before the assessment when you're in examination and you can bring issues up. But the assessment has been made. And so here the IRS is sending you a bill that explains how much you owe. And I know we've had some questions about previous sessions about retirement plans. All right, can the IRS get your retirement plans? And the answer is yes, they can go on and do it. But the thing of it is that they can only get what you can get. So if you, like Peter Thiel of PayPal fame, that has $5 billion in an IRA account, the IRS can't get it until it starts coming to Mr. Thiel. All right. So as long as he doesn't touch it, cannot get it. So, but that's one of the things about this lien of putting it on there. Can they put a lien on that account? Yes, they can. They can do that, but they can't have that account liquidated. And I always I put this in, it says neglect or refuse. All right. And if you dealt with the IRS as much as I can, when you're talking to the officers and agents, they'll tell you, they're more considerate for those people who are unable to pay as people who are unwilling to pay. And so you have to always remember that. If somebody has got a $100,000 tax bill and they got $500,000 in the bank, the IRS is not very receptive as far as some of the arguments and claims that the individuals are putting forward, as opposed to someone is in the 80s, they're bankrupt, they've got a $50,000 debt, maybe, a non-collectible status or something like that, the IRS. So you have to really know where your client is standing and how that will be judged by the IRS. So levy is a little bit different than a lien, because a lien is just a notice that the government is putting out there, but a levy is the process of taking. All right. It's a legal seizure of property to satisfy that debt. Okay. And so, as we said before, examination issues, or you've got some issues, and I've got more deductions that I want to take on my tax return. No, that's not where we're at as far as this process is concerned. All that has, if you know, and I've had clients, they want to duck and dodge, and then they get down to this point, and then they want to bring up these issues. Well, they didn't take into account, they didn't do this, they didn't do that. Too little, too late. That's why you have to do that much earlier. So a lien is a legal claim against your property to secure payment of your debt, while levy actually takes the property, takes it. All right. So now you can just read down at the bottom, it says your appeal rights are explained in that publication 1660, collection of appeal rights. When filed, the notice of federal tax lien is a public document that alerts your other creditors that the IRS is asserting a secured claim against your assets. So you can have a lien, all right, but this notice is a public notice that the IRS is going to seize your property. And I can tell you all kinds of stories, war stories about some people that I've worked with that had farm property, property that just you wouldn't think anything about. Hey, I'm living in the big city, but I've got 40 acres out here in rural America, and the IRS through public record search find this out. They're putting liens on it. They've got all kinds of things. Some of these plots of land are being leased out, being used, all types. The IRS does not care. If it's an asset, they want it to satisfy that debt. But now there's a number of different types of levies, okay? So basically there are three types of levies: a wage, a bank, and an asset, all right? And we're gonna briefly go through these. And so, but I wanted this point to be there. It says a levy on your bank account takes only what is in the account at the time your bank receives the levy. Okay. So if the bank receives the levy today, let's just say this is January 1st, all right, they've got a 21-day period. Whatever money comes in that 21 days, it's gone. And yes, I've had situations where clients are saying, should I put this in or not? And I always advise them, I can't tell you one way or another. Here's what the IRS is doing. You make up your mind. And yes, of course, they do not put the money in that account. But then you have this one-time bank levy, but then you have what we call a continuous levy. And generally the continuous levy is like wages, or as we were speaking earlier about having something attached to a retirement account. When that money comes out, then it becomes a continuous until that tax debt is satisfied. And let me just say this. As far as the IRS is concerned, they live forever. You may not live forever, but the IRS lives forever. And they have means and methods to receive that money, whether you are here or not. They still have those means to get that. And so that's why on this continuous levy with wages, same thing, the job is notified. Subsequently, that taxpayer gets some information. They call their job, and the job said, too little, too late. All right, we're garnishing your wages. Okay, and so I found out the quickest way to stop that is get on the payment plan. I've said this before in previous sessions, I've got this done in a day. Whereas got on with the IRS, faxing back and forth, get it approved, get the release, had the release go to the job all in the same day, and that person can go and have the um, that levy released. And um, but also it's attached is the fact of that they have to have it come out of the bank account. So that's a continuous one. And then we've got the last one, the assets. But I briefly go through these and explain. So as this is saying, part of your wages may be exempt. They don't take all your money. They take part of your monies, and so they may take 20%, 30%, vice versa. They may leave you 20%, 30% to go and satisfy. It depends on how much you owe and that period of collectability, because that's one of the things with the IRS. They have to collect this money within a certain period of time. And so if the window is 3 years, then you're going to have a lot of funds taken out. If it's 7 years, then you can negotiate a payment plan, which is much more favorable to you as far as that is concerned. So, but one of the things it says, the IRS mails publication 1494 with the levy, which explains to your employer how to determine the amount exempt from levy. So it's the employer that is doing it, all right, and not the IRS. Whereas the IRS will make that determination when you fill out a financial statement form, and then they can go on and make that adjustment on their payment plan. So you can see, as far as an employee, they don't really have a lot of information about your financial situation, as opposed to when you get a payment plan and you're sending this to the IRS, they got a little bit more information to come and make that determination. And again, as we talked earlier about the bank levies, the 21-day waiting period, all of this is delivered by mail. You're not going to get an email. You're not going to get a phone call. And I got this in there. It says the date and the time of delivery of the levy is the time when the levy is considered to have been made. In the case of a bank levy, funds in the account are frozen as of the date and time the levy is received. So if you got $50 in there on that date, then that's all the IRS would get. But if you continue to add funds during this cooling off period, that 21-day, they're going to send that money too.
Hey, Vincent, this
yes,
is Kelly.
sir.
Hey, how are you doing? I joined your presentation. How are you?
Okay. How can I help you, Kelly?
Great. I thought I'd join this because I was on the phone with a client 2 days ago, and I thought I knew everything, but I don't, as it turns out. But I thought, well, I'm going to ask the man who might know some of this. So I thought, well, let's just do it live, and we have not rehearsed this, right?
Yes.
So it just so happened that I think you were kind of going over this in your previous screen, but the question I was getting was, it's a person with tax debt, and it's matured enough that it's it's coming to a crescendo here, and to me, the crescendo, the pinnacle of collection is wage garnishment, right?
Yes.
That's even, to me, that's kind of like worse than asset seizure, in that this is what I need to pay my bills, right? And you just took that away from me.
Correct.
I guess, but the term, I've always used the term garnish wages, and then I thought your previous slide, you said seizure, right? Are they the same? Is it virtually the same thing?
That's right. That's seizure when forcibly taken, not where, like, if you do a payment plan that you are voluntarily going through this process of doing this. But any seizure, which is a levy, is forcibly taken. We're not asking you. We're not holding your hand. We're going to, put this bank levy on, we're going to put this wage garnishment on, or we're going to go out and physically take these assets.
Okay, so the seizure is the act of taking that. The garnishment is kind of the other side of the coin. It's like the how they got to those assets. It was wages that were garnished, but they seize those, or do you kind of use them interchangeably?
Right. You sort of kind of use them interchangeably. Seizure is at the top, and how do they seize? It's by levy. And so there's the bank levy, there's the wage levy, there's the asset levy, and they're done, and there's different processes. And that's one of the things I always say about this whole thing with IRS representation. That's where the little finesse comes in, because each process is different. How you would fight a bank levy or the oncoming of that is different of how you would fight a wage levy. Because on a wage levy, you got to sit up and say, hey, you can, forestall this. Is like, here's my financial condition, and XXX, you're going to impoverish me, and I'm not going to be able to live. I got 6 kids up under age 10. You're going in that way, as opposed to with a bank. If you got $100,000 up in there, you saying, hey, look, I've got these vendors out here. I've got this. You freeze this money, I'm going to be in foreclosure, and this is going to be a process. So each path is different, and the rationale that you would use as to forestall this is much different. And so that's why a lot of times people think it's just one size fits all. Hey, I don't think IRS is right. It's like, no, you've got to have a finesse of how you're dealing with them, especially when you start being in these appeals processes, because that's the thing with a pre-appeal. It's freezing those actions. So now it's frozen. Now I'm going in and I'm talking to them. And so now in each one of these areas, I'm bringing something different. Like I said, for a bank, hey, he's got a business, he's got a small wage coming out because it's the assets. Hey, you take his vehicle, how's he going to get to work? All right, he's still going to have to shell out money. So it's just, that's what I'm approaching, as opposed to people just sit and say, well, I can't pay. I was like, no, that's not good enough.
Yeah. All right, so I'm gonna make a statement here, and you tell me if you're gonna agree with this or not. As you know, the Tax Resolution Help Center, you signed up to help with this, and the goal is to kind of empower people to do this themselves if they can. Don't get ripped off by unscrupulous tax people. We educate, inform. Kind of the goal was to get them prepared to deal with this. Number one, face up to this stuff, and then number two, deal with it. Now, I'm kind of thinking that if it's at the point where you're dealing with seizures of assets, garnished wages, that it's kind of beyond the point where they can do it yourself. Don't you think? It's kind of like,
well, this is anytime there's a representation before the IRS, if a taxpayer is going up there by himself, he's sharpening. He's going to get ran over. All right. Because
whereas some of the stuff I can honestly say they can do that. I mean, they can do a payment plan themselves. They can do an offer and compromise. It takes a little more skill, but I'm kind of thinking that while the theme is to empower people to do this themselves, I think we'd probably agree that if it's got to the point where we're dealing with seizure of assets, that timeout, you need to bring in the big guns. Fair statement?
Fair statement.
Yeah.
All
right. Yeah.
And
I wanted to get that. I know that's one of the things you do quite well. And I know that you're not out here self-promoting, but I guess I kind of wanted to promote the idea of getting an expert like yourself in here, because I just don't think they should be doing this on their own. It's this thing.
No.
Yeah. All right.
No, no. And,
Okay.
and I've had situations where I've counseled people for the DIY that they could do it themselves.
Yeah.
You know, that you need to do these particular things, but that's very early on.
Early on.
Because because this is like a funnel. Once you get to this particular point, it takes a lot of understanding of IRS processes and what they're going to do. Because like I said, once I'm into the point where the appeal has been filed and everything is frozen, I'm telling the taxpayer, you got to get your affairs in order, because we may be dealing with someone in IRS says, I don't care, we're going to proceed with this. And so within that window where this is frozen, then, you got whatever. I mean, you taking a massive withdrawal out of your wages. You are, not having depositing checks in the bank and stuff. And let me just say, I don't advocate that. I'm just saying, here's some things.
Yeah, right.
You got a business, you're trying to feed your family, and this is going to be a severe hardship, financially, then you're going to have to get your affairs in order, because this is going to come quickly after the time frame comes out, and then the IRS is going to do what they're going to do. And like I said, I don't advocate people, but I'm just saying, I have seen people, this is what they have done.
Yeah.
And they were able to survive this, to be able to go and negotiate, let's say, a payment plan or something like this. Because I've had small businesses, insurance companies. I think the worst one I had was a daycare that, and they, that we fought tooth and nail till they finally, after they got to this point where the IRS had taken one of the school's vans and stuff, and then they come back at the fact, oh yeah, well, we should have listened to you. I said, I told you. All right. You just thinking I can do X. You have to understand the process. And if you go it alone, the IRS is going to take advantage.
Yeah. All right, good. I wanted to get that point. I'm sorry it took all your time, but I wanted to get that question asked and answered. And I thought the group would.
Yeah, and I had the earlier one when it was brought up about the retirement, and I throw that in now, that they can attach it, but they cannot force liquidation as far as the retirement account is. Only when you are taking distributions or withdrawals from that, and that levy is on there, that's when those retirement funds will be garnished.
If they attach to your retirement account and you wait until, let's say 10 years has lapsed, if the lien has been attached to that, or would it be a levy that gets attached to a retirement account? If that gets a levy, if that gets attached before the statute expiration date, they can't continue to keep that claim on there if the CSED expires, the 10-year, whatever the expiration is, correct?
Right, but here's the thing, and one should request currently not collectible. And then if you request the currently not collectible, you'll get a letter from the IRS saying currently not collectible. All right, but sometimes it goes to not collectible, which tolls the statute of limitation. And that's why I always sit up and say, the IRS lives forever. And so you wouldn't even know that until you pull a transcript. So I've had people, they go, oh, hey, I'm all free, fine and dandy. I go, hey, did you get a letter from the IRS or nothing? I pull that transcript and it's got currently not collectible on it. And so the statute of limitations has told. So it can go on and on and on. And that's to the benefit of the IRS, because they're saying, hey, we live forever. You may win the lottery in 15 years. And believe me, if you do, they go get their money.
Yeah, right.
It's like, no, they put it currently non-collectible status. And so now they're going to say it's collectible now. So
Yeah, right. Okay, that's all I had. Thanks. Enjoyed watching your presentation. You're doing a bang up job. Thanks.
All right, thank you, sir.
Yep, right. Yep.
So I'm just going to quickly go. We did the majority of it, and you're looking at the seizures and the collection notices. As far as that, here's a summary of the appeals program, the collection appeals program, the collection due processes hearing or equivalent hearing. Once again, those are a CAP. You cannot appeal it to a court. CDP you can, and that's one of the things is, and I always say this, with assessments and determinations, only one that can reverse this or force the IRS is in court. That's tax court, whereas you don't have to pay the tax. In district court, you have to pay the tax and you sue them for a refund. But that is the only place you're going to get a redetermination of any assessment that the IRS has done. So in conclusion, if you have any questions, let me know.
All right, thank you so much for that, Vincent. Yeah, it was a long conversation, but nice one with Kelly. Yeah, we do have a question here. This is from one of our attendees in Zoom. It's from Dave, and his question is: I owe past IRS debt. I get notices that they could seize my assets. Can they seize my physical assets in addition to my financial assets?
Yes, they can. And that's one of the things is that once a agent is assigned to the case, then the agent will do all the background. So they're going to pull credit reports, they're going to get background on you, and then that's when they go and look what has been titled in your name last 10, 20 years, and then they're doing this search. So when that agent comes, they are very knowledgeable of what you have and what you don't have in your activity, okay, unbeknownst to you. So that's why in that situation, and as we were just talking earlier, they may be sending these letters, but they may sit up and have your account in currently non-collectible. And generally, those notices should come yearly. So once you go into currently non-collectible, year after year after year, you should get this letter that's notifying you of what they could do. But what generally is happening in that situation, they're making a determination that pulling it out of non-collectible is not going to be a benefit. All right. So they're just saying, hey, we're giving you an opportunity. Did you get a windfall from an inheritance or something like that? And you say, hey, I want to get rid of this. And if you got some liens or other things out on some stuff, then you can go on and have that taken care of and get your releases and do that. But it sounds like you're getting those yearly notices that they're saying, and that to me tells me that your account is not collectible. So because if it was collectible, then they would move on filing those liens and levies.
Mhm. Okay. Well, thank you so much for that answer. Definitely was clear answer for them, for our audience. Thank you. That was actually our last question that I can pick up for today's session. Anything else that you want to add, or an advice or a tip for our attendees or audience that they will not go this far, a headache from an IRS?
And that's one of the things I always counsel is managing that client for the practitioner, if you can manage that client. And you need to make that assessment up front, because you can put a lot of time and effort up in there and you're never going to really get any resolution, as far as that. Because I've had that with clients. I'm calling them, I'm requesting documentation, I get no response, and I just say forget it. And then weeks later, they're complaining that I'm not doing anything on their case. Okay, if you're just an individual, the earlier you are with the IRS, the better. But it does come to a point, this is just me, when you get so deep, especially in collections, that the IRS, and I shouldn't say this on the IRS, but they are very unpersuasive to your arguments, as opposed to if you've got a lawyer, a CPA, and a road agent, the whole, because it's like very chilly, and when you walk into that room, it just warms up, and you having this because they believe you know the process, you know the procedures, and they can't just sit up and just say, and it's not that they're avoiding them, it's just we're going to the pressure you need to pay. So I come in, I'm asking what has happened at this particular point in time. Remember, I want to know what the process is. Hey, did this happen or that happen? And then they're going to tell me your client was unresponsive or this happened and stuff like this. And we're going through this. All right. And this is a good thing. And they'll tell you it's not for them to educate, but because your client will say A, B, C, and you start talking to the IRS and they say X, Y, Z. So that's why for individuals, I'm always documenting what's happening as far as the IRS, faxing material. And so when I go in there, I've got my documentation. And a lot of times for individuals, they just don't have that. So that's why for the IRS, trying to go in there and bully the IRS as an individual just doesn't work. All right. They won't yell and scream at you or anything like that. They generally do that in very pushing the business, small business. But individuals, they don't do that. They just want to know where you work. Oh, you work at Silicon Valley Bank? Okay. And do you own your home? They ask you those questions, and then boom, that's when those liens and levies and things are coming out. So that's what I would leave with practitioners and then also individuals.
Well, thank you again, Vincent, for that beautiful answer. It's really actually it opened an opportunity for individuals or self-employed, not self-employed, but those people who is working with the company. It will really help out because I do have a follow-up question though, because I've been receiving before, way back before, I was working with a bank, a lot of people calling, our clients calling that why is their bank is being frozen, and when we check, it is because of levies. We transfer them to that department. So, is there anything that you can advise that they can still do for this individual that they can actually maybe unfroze the bank since there's going to be like a pay will be coming in that bank account? Mm.
There's nothing. Once that, because now the point of it is that the bank is legally obligated. So if the bank does not do in accordance with what was presented to them, then they're on the hook to make up. So let's say it was $5,000 in the bank, and the bank says, "Oh, we feel sorry for you. We'll let you take the $5,000 out." IRS is gonna know, and they're gonna tell the bank, "You owe us $5,000." All right. So that's why they're like, no, no, no. Any legal compliance is like, no, we're gonna follow this. And if the taxpayer has some issues, then they have to call the IRS. But this is what we found by getting this. So that's why I said in the appeals process, when you're in that appeals process, then this is where you have opportunity again to get your affairs in order. That, because I tell them they're coming. They're going to freeze your account. They're going to garnish your wages. They're going to put liens on your property and put it in to go out and seize this. You got to do this now. And that's generally if I have a conversation with somebody and I look and say, this is not really going too good. Hey, let's take advantage of the appeal process. It freezes this, and then this is your opportunity to do what you got to do. Because at this particular point in time, there's not much that's going to happen. All right. And I won't say it's a last minute type of thing, but it's pretty close if the person is not willing to agree to a payment plan, because that's what you can't always do with this, is come up with a payment plan. And I always tell people, hey, if you got something, you got, let's say 10,000 in the bank, you tell IRS, hey, I give you 5,000, I'll do this, and you start in this negotiation process to go and do that. But once that paperwork is served on any third party individual, they are not going to cross the IRS. There's just nothing that can be done. And you just have to go back to the IRS, come on, and like I said, payment plans, get these levies and liens off very quickly. All right. If the IRS agrees to what if you sit up and say, well, I got 50,000 in the bank, I give you 1,000. And I think I said that before. I had a client, she had a lot of assets, but didn't have a lot of cash flow. And the IRS wanted, and we negotiated a payment plan, which she did not want. And so she disengaged me and got somebody else and went back and forth for about 4 or 5 months. And she ended up taking the deal that I had presented to her. Because I told her, you're just not going to be able to, circumvent at this particular point in time if you've got assets, cash, or anything valuable.
I see. Well, thank you so much for that answer. Hopefully, our attendees and other viewers, because most likely, not only for big those who have businesses, also people who are working individually, they are definitely needing help for this, and it is a good idea that they should enroll in our what we offer, and because it's something that they can save since they cannot like it's not also like a practical if they get someone if they are just if they will hire such as yourself as an expert if they are just working as an individual, right? Okay. All right, so that's actually the last question that we have right now. Was actually a good conversation. Anything you have already said your piece, so do you have anything else to say? Was a long.
Well, like you were talking about the cost of having a professional, and it can be prohibitive, and it all depends on what your circumstances are. Generally, the ones that I have are big cases where you got people with 6-figure, two, three, four, 500. I mean, I had a small insurance company, but those were payroll taxes over a period of time. They owed 600,000, and there was no penalty to interest. So that's generally the issue that happens with small businesses. They do not remit the payroll taxes, and now they have that, and now you into the trust fund as far as that is concerned, and then that's the issue with the trust fund. They become personally liable for it. So some people think, oh, I just get rid of the business and it's all gone. It's like, no, if you had a corporate tax liability, yes. But when you got those payroll taxes and however you own that, they're coming after you. And so that's where it gets of knowing what your situation and circumstance is with the IRS and how to represent yourself properly.
All right. Well, thank you so much, Vincent. We have learned so a lot of things today, and also for our individuals or of course our attendees and audience definitely will help them out if they also listen again to one of our session by next week. We will have another session. um, thank you so much again for your time and sharing your knowledge and giving us a real life example. It really helps me and also our audience. All right, I hope you have a good the rest of the day. All
You
right, bye. Okay, everyone, I want to thank you all also for attending our session for today. And I hope that you will also join again by next week. Definitely, you will learn a lot when it comes to taxes. And of course, our main goal here is to help you reducing your taxes and increase your wealth. We do this with the try tax method of DIY, do it yourself DIT, do it together, and DIA, do it all. Three methods, one solution. This will reduce stress from no IRS or state tax debt and a happier, healthier life. If you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. Since it is now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we have a team of experts who can do your tax return for you. Please check our website at taxresolutionhelpcenter.com and please join as a member today for only $19.95 per month. And again, thank you all for attending today and see you all next week.